It's Sunday, the 20th of August, 2017. This is a chart update for the US dollar gold price and related markets. Gold got up again toward the 1300 level, just touched 1300 on Friday night Australian time and pulled back. It's hit that a couple of times in the last 4 months. I'm not really sure what to make of it at this point, if it's got the legs to get through there. I think that reversal might have been on the news that Trump had got rid of his one of his main advisors, Steve Bannon, and whether that, I think the stock market rallied on that news and gold sort of sold off because it's viewed as better for the US China trade relations. I think that's one of the main things, but I'm not really sure if that's a major factor for the gold market at this point. There has been that sort of underlying bid in the market, which you don't often on both of these moves. When you've seen weakness, it's just kept falling. But this time, when we saw that really sort of shallow pullback, and all you can see here, those long wicks at the bottom, it looked like it wanted to be bought. I think this might have been the North Korea sort of talks, or not talks, the North Korean news really ramping up last week, or the week before last, sorry. And then this week that sort of died down a little, but nothing's been solved there. It's still in the market. But I don't think the market originally had rallied to this 1265 sort of level based on the North Korea stuff. So I don't see any reason why it should fall below that in the short term. Often that tends to happen. It rises on just general money flows and normal trading, and then a world event will happen. And when that world event sort of dies down, people expect the gold price to get sold off. But it's not. It didn't go up on that. Well, for most of the way anyway. So I don't. The fact that it held that 1270 level when it pulled back again at the beginning of last week sort of looks pretty bullish. But we did see that reversal candle, so maybe you come back down to this little uptrend that we're in here and see if it tests sort of this 1275, 1280 region at the start of the week. That's probably pretty possible. Importantly, maybe importantly, I'm not sure about this got long downtrend we've been in. Clearly, we're out above that now, and it's consolidated a little. These couple of little pullbacks look pretty healthy to test that breakout. I don't think traders are sitting there waiting for this line to be broken and then all jumping into the market. But I think it is often you see when these long downtrends in place, you see it doesn't go straight out of it like a breakout. That tends to be more for horizontal resistance. I mean, the classic one was the horizontal resistance or support line here was this one here in 2013. If anyone watched the gold market when that happened, that's the classic real sort of stop loss triggering, and that was based on this horizontal resistance level at 1520-ish. And when that went, it precipitated all this. So that doesn't tend to be the same with these diagonal trend lines. And I think for the equivalent is probably about 1400 in the gold market for that same sort of event to happen, which is sort of around last year's highs. I think I saw a chart this week from Peter Brandt, who's a sort of a professional commodities trader and a bit of an experienced trader that I follow a little, and he sort of talked about that he likes to see he thinks of this as sort of a head and shoulders complex bottom here, and one of the main criteria is that you've got to have sort of equal periods between the low and the sort of the shoulders and for the breakout. So he's sort of saying that you want this length between, you see there, between 2013 and 2015. You sort of want that 2-year event, 2 year sort of bottoming process, and it will gradually make its way up to that sort of 1400 level, and then you'd expect a breakout from that there. So I mean, I think that's probably pretty on the money from where I can see it. It's in that sort of steady uptrend now, and I think we're going to gradually move toward what we had last year, and that's my view based on just where the stock market is, and in these videos I look at the other markets as well, and gold is well positioned just because I think some of the other the things that move in opposite directions to gold are generally looking pretty poor on the chart. So I think that puts that underlying bid under gold, and the first one of those is the US dollar. We've been tracking this since the start of the year. I was tracking it when it's above 100. It's sort of steadied around this critical level around 93 again. But again, it's been really weak. You can see if you zoom in on that, the last couple of weeks of price action, long wicks here at the top. It couldn't even break sort of above this 94 level. I think there's been some generally slightly more positive US data coming out, but it's been sold into every single time. And again, toward the end of last week, it looks like it wants to break down. I'm not sure if it's going to break down imminently. When you see a sell-off of this magnitude, I mean, I think I read that this is one of the biggest sort of sell-offs in the last 20 years in the US dollar. So, of course, this was one of the biggest up moves in the last 20 years. So I guess one follows the other generally. But when you see a down move like that, you're probably looking for a little bit of consolidation, like a relatively long period. It could be another month or two. It wouldn't surprise me if it sort of sticks around this sort of in a shallow band between maybe a bit higher and this 93 sort of range. I don't think it's going to break down immediately. If you look, what I've been talking about previously is the last interest rate hiking cycle in the US, and that was this in 2004, 2006, this orange box here. And you see here we had that very similar move, that down move from the highs there, which I talked about as similar to what we've had this year. But then you saw a period of sideways action for almost 4 months there, where it sideways traded before it just kept breaking down a lot more after that. And that's kind of the analog I'm looking for again. So I'm thinking we're more likely to consolidate here, and then at the moment it looks like a breakdown is the more likely scenario. And that would also, if we look at the S&P 500, that again looks weak. This week it's just clinging on to this trend line that's been in place since the start of the year. But you saw a couple of down days here, biggish down days, like 1.5% sort of thing. And there we've only seen sort of, that looks like I can't remember the name for it, but it's a very bearish formation when you see that big down move and then it sort of consolidates inside the range there and then breaks down again. That candle formation is generally pretty bearish. And now it looks like it's kind of broken down slightly there. I mean, this has been the buy the dip sort of trade all year. Well, for 5 years probably. But this time it really does look like it wants to fall at least a few more percent. So there's definite weakness in that S&P 500. I think the Dow Jones has been looking a bit stronger, but that kind of isn't a real proper index in the same way, because it's price weighted, and that's not representative of the market. The S&P 500 is a better index, but again, that looks pretty weak and probably the weakest it's looked all year. I'm looking for that sort of, I've talked about before that there's been one of the longest periods without a 5% move ever in the US stock market. So a 5% move could really see, I think that generally in a down market for the S&P 500, gold will perform well. That's the base sort of case I've been looking for. So while the S&P 500 is really at these sort of lofty levels, I think can only be good for the gold price when it breaks down. Some of the other markets, the gold miner ETFs, the GDX and the GDXJ, that's really looking like it just it's just a tiny bit of a breakout above this line here. Didn't consolidate it, sort of sold off again with the weaker gold price on Friday. But it does look like it wants to break out. I mean, I've heard a few people talk about this. This is generally a bearish formation, this sort of descending triangle pattern, more likely to be bearish anyway. But I've sort of been following it closely because often people say that the mining indexes will lead the gold price, and then this one hasn't looked very bullish all year, but it just seems like it looks like it wants to break higher. And with the S&P 500 up at those high levels, I tend to think that the up is the way it breaks out of here, but it's just trying to do that. Maybe it sort of holds this trend line a little bit longer, but I think it's looking like it's going to break to the upside, not necessarily in a big way immediately, but just slightly peaking above that downtrend line. The GDXJ, I think, is a little bit similar. It's even more sideways, almost, the GDXJ. I'm not sure, and I've talked about before, the GDXJ had the rebalancing and a lot of portfolio movement, and I don't know how much that's affected the usefulness of these indexes as an indicator for the gold mining market. There's a lot of money being pulled out of the GDXJ, for example. And if you look since the rebalance date, which is this, I think about here, this Friday, June 16th, volumes really come off in this market. And I'm not sure how useful it is, again, as a leading indicator, but it's a pretty much a sideways movement there. But I think it's, again, I'm looking for it to break higher. The one that's done pretty well, if you remember the video I did maybe a few weeks ago, I was talking about this long-term Australian dollar gold price, and we'd broken down this from this range, this trend below sort of 1580, and it was looking pretty bearish. But I said that's when I'd moved into some of the larger gold mining companies, Northern Star, St. Barbara, in particular, ones I moved into then, and we've seen a good move off the bottom there. And that's generally what happens at the bottom. When this previously been down at these levels, you're strong, quick movement. It's advanced. What's that? Almost $200 both times in the space of maybe a month. So again, I think we're looking like we're sort of consolidating here. The Australian dollar's generally been pretty good still, so it doesn't look like it wants to break immediately higher, but I don't know what the catalyst for that is. But generally that's been the pattern. So still looking pretty good there. It was a good buying opportunity, I thought, when the gold price broke below 1600 Australian. So again, I think still holding those quality companies that I bought there, and I think that's the best way to play this market, just buy good companies on those dips in the gold price. But yeah, generally I think gold market's looking probably the best it has for in the last 6 months. Good consolidation moves on the US dollar chart, and this week is probably likely to be a more sort of little bit of downside, hoping that it can hold and at least consolidate above this sort of 1270 level, and then look for another move above 1300. And we're still in this Trump. This is the election day. This was the largest day of futures contracts traded ever in the gold market, from what I've heard. So that does create a huge resistance level, and it takes a couple of times to break through there. So it's not surprising that we've had those 1, 2, 3 cracks now, and I'm looking, the more times you have a crack at it, eventually you get through. So odds are that it's going to come at some point soonish. So that's what I'm really looking for, and then hopefully the mining indexes follow that at the same time. Thanks.